Hey guys, time flies. It is officially the year of 2019, and today we're going to do something different, something we have not done before on this channel. Introducing Ron, the next $1 million trader. In this video, we're actually going to share a live recording of our webinar where Ron, who started with our VIP group on September 10th, 2018, wants to share his experience and show you specifically how he's trading, both the good and the bad, and he's doing so with an intent to share his experience. You as a fellow trader could get better, learn something from this, apply it in your daily swing trading or day trading so you can get better results. Thank you, Ron, for sharing. We greatly appreciate that. And also, in this particular video, we will show you just a brief plan of action. The earnings season is about to start, so you'll get a chance to see specifically what we're looking at and a plan of action for next week. Just getting a little bit ahead, if you're curious how Ron, just in the last 3 days, earned $65,000 trading options. Make sure you finish watching this webinar through the very end. Enjoy. Before we get started, I want to wish everybody great 2019. As you guys know, we've had a pretty good start, and Ron, what did you make already this year? Over 50 grand?
This year for 2019, I'm 65.
Okay, so for those of you that are trying to figure out, this will give you like a good idea specifically of what helps Ron, because if you're not hitting 65K in the last few days, honestly guys, we have unbelievable opportunities, right? 65K, I don't know of many other groups where traders are hitting 65K. That's what, 3 trading days, Ron?
Exactly, yep.
In 3 trading days. I mean, that's a way to start the year, guys, and the reality is, there's nothing that would make me happier than to see everybody having these kind of results. So I'm grateful that Ron wants to share. Before Ron gets started, I just wanted to point out a few quick things on the schedule for this week, because this week is going to be insane. Ron, is there any way you can bring up that slide so I can just knock that out and we can just move forward with all the details?
All right, let me go over the table of contents here.
Okay.
All right, so we're going to go over earnings week. We're just going to cover that section. And I wanted to go over, again, repetition is key. So I want to show you guys again the trade log. That helps me a lot. I said before, data is king. And then we're going to cover execution and the alerts. So you get an alert, buy, what do you do next? Entries and exits. And then your mental state. I found it to be key in executing and delivering results week after week, and then I'll go over the summary. So, all right, go ahead, Leo.
Okay, guys. So as a part of the VIP group, you should have gotten this message. Okay, you will start seeing these if you're new. We're fixing to start the earnings season. As you can see on this one, it says week 0. The reason it says week 0 because there's really no prominent companies that are announcing earnings, but there's definitely some really good plays here. So when you get in a message like this, as you can see, this is the easiest way to read. It's going to tell you the date right here, Monday the 7th. Right here you will see AM. AM means these are the companies that announce earnings before the market opens. So you will start seeing the reaction. These companies are going to be heavily traded before the market opens. And then as we progress for the earnings, you will see this filled out literally with sometimes 20 companies reporting earnings after the hours. So the goal is this: if you want to make the best use of this, I want you to pull up the charts the day before these companies are announcing earnings. Ideally, I want you to take like an hour over the weekend and pull up all the charts to get an idea. And as you're getting closer to trade the stocks, to put actual trades, like literally look at multiple chart time frame and analyze it based on the information explained in the chart divergences. And that'll prepare you to actually take action when these companies are reported. So here's some of the highlights, okay? This company right here, ticker HELE, okay, this one moves a lot on earnings. So as you can see right next to it, you have an exclamation point. If you see a ticker symbol here that has an exclamation point, that means that we're actually considering a trade in this particular stock. Now, some of them may not have an exclamation point. That tells you that, we're most likely not going to trade them. Example would be on Wednesday the 9th. You're going to see a lot of home builders are going to start reporting earnings, like LAN, which is Lennar Homes, KBH, which is KB Home. But what we want to observe, even though we're not really trading these things, we want to observe the way the market responds, the way the institutional investors are responding when these companies are announcing earnings. And one of the key things is to establish specifically the reaction, meaning after the earnings, are they initially selling off and they're coming in and starting to buy the dips? Or are they initially going higher and then they're selling off, meaning they're selling the tops? So that's what we want to see. And this is the first week. We're actually officially not even counting it as the initial week of earnings. That's why we call it week 0. Next week is going to be week 1, where you will see some financial companies like JP Morgan and so on will be announcing earnings at some point next week. So you will be receiving one of these, Saturday morning typically. So use this, pull up the charts, and get ready for these things. Very, very important, guys. Okay, the next thing is this. Look where it says right here, China. Can everybody see this? So as you can see, China and China right here, these are two very, very important days for us because Trump is meeting with the Chinese president. You will see a lot of probably momentum after hours, and that is important to understand that. So don't try to put some crazy trades out there. Don't be committing a ton of capital as soon as the market opens tomorrow, because the market will open higher in the morning in the expectation of good news. If the news from China is going to be good, the market could be going higher for literally a couple of weeks. But if something happens in China, you want to be ready. You don't want to be staying with your positions. If initially after Chinese news the market goes higher and starts selling off, you want to get out. And so you want to be ready. So when it says here China, these 2 days, pay very close attention to any news that could be coming out of China. Because if the news is negative, then that recent rally that we've had and the strategy for buying the dips, that needs to be reversed. So be ready to take action. Then keep an eye on the European stocks on Tuesday. In other words, all the indices, as you're getting some messages in the morning, hey, this is what's happening in Asia, this is what's happening in Europe. We're going to see a lot of things happening in Europe over the course of Tuesday and Wednesday, and this could also move the market. And on Thursday, again, we're going to have Powell give another speech that could move the markets, but I don't think it's going to move the market nowhere near to the extent like this Friday, okay? Because the way to interpret the action that took place this Friday, the job report number was good. Generally, anytime we've had a good job report number, the markets were selling off. Why would the markets sell off on good news? Well, because strong job number actually means higher interest rates. So they already knew the job number was going to be good. Generally, what was supposed to happen this Friday, the markets were supposed to sell off. They expected that. Don't you think it's a coincidence that they had Janet, they had Bernanke, and they had Powell, all 3 Federal Reserve chairmen, get together in a conference to say all these nice things, how sensitive they're going to be to the interest rates and all that stuff. They were really ready for the market to do something crazy this Friday because the job number was good. But they kind of put this whole show together, and they've done a really good job. And so there is a good chance that this rally is gonna move higher. And if that's the case, you just kind of want to put on your positions out there. You want to stay with them, and you want to let them make you some money. With that said, this is the plan of action. Okay, you're going to be getting this every week for the next 12 weeks. It's up to you to study the charts. We can't do it for you, but make sure that you do your homework, because when these alerts are going to be coming in and you're already familiar with the chart, you already know what's going on, it's going to be a lot easier for you to trade more successfully, and that's the goal. Now, last thing. One of the biggest biotech conferences is happening this week. It's going to actually go pretty much the whole week. Pull out your winning watch list. There's about 50 or 60 biotechnology stocks in the watch list. BG&E that I was sending the alert, last week. like ICPT. All of these companies are going to be a part of this biotech conference, and it's incredibly important that if you see a stock move, that you're ready to take action. So actually, in the next 24 hours, you really need to review all the biotech stocks that are on your win and watch list, and just be prepared, because a lot of biotechnology stocks, they will move like crazy this week. You will literally see biotechnology stocks falling by 30, 40 bucks. You will see some biotechnology stocks that are going to go higher by 20, 30, 50 bucks. You want to be reviewing them and keeping an eye on all these biotechnology stocks, and just be ready. This is it as far as the plan of action for this week, guys. And Ron, take it away.
All right, so I want to cover again the trade log. I keep telling you guys, to me, this was game changing. Keeping track of your trades and just keeping track of your data, to me, is just data is king. So knowing your targets for the day, the week, the month, just having a general idea of where you want to be or where you could be definitely helps a lot. And then keeping track of that data. So your max trade allocation, again, this is more of a flexible number, but it's good to know. If you, especially when you have a small account number, a small account, 30,000 and under, or 50,000 and under, you do want to have an idea of where you want to, how much money you want to put at risk at any given time. I'm actually going to show a good example of that from Friday. This is why it just came to me, hey, I should share this, because you'll see where I was and how I adjusted, because I wasn't comfortable and I didn't feel in control. Even though it was going our way, I wanted to get back in control, and I'll show you guys what I did to make sure I had a good Friday. All right, so risk management, the number of trades, win ratio, you want to know everything. Once you go back and you see what happened, you'll know why you were successful and why you weren't successful, especially if you recorded your screen, as I normally do on my computer. If you guys don't record your computer screens when you're trading, I highly recommend it. I would get an external hard drive, 1 terabyte or higher. On the Mac, you can use iMovie for free. I personally use ScreenFlow. On the PC, you can use Consultation, and I'm pretty sure they have a couple other ones that are free. If you're using your iPad or anything like that, they already record for free. So you can record right on your device by just swiping up and looking at clicking on record. All right, and then we have the market moves. I've already included it in the sheet. Let me share the link with everybody again. If you guys want to use mine or create your own, it's fine. It doesn't affect me, but here it is. I just sent it to everybody. You guys can use that sheet, and I'll go over it right now to show you guys how I put it together myself. Okay, so let me go back. All right, let me show you guys my sheet. All right. So once again, this is the sheet. The way I have it sorted out, on the left here, we have the date, account balance. I set this to 5% max trade allocation. I am flexible on this, obviously, as you'll see on the video. But if I'm holding anything overnight or I'm concerned about something, this is the number I try to pay attention to. And then my risk, which is then calculated in a number. And then a daily profit goal. My original intent when I created the sheet was, hey, if I made 1% a day and I'm trading 20 days a month, that's at least 20%. That's an awesome return. That's an awesome return if you do that. And 1% a day is really nothing. You can literally do that in the first 5 minutes every day. You'd be done. Obviously, what we're doing here is a little bit more advanced. So we go beyond this, but this helps you kind of keep track and see where you are overall for the month. And you can see here how we're doing. So this is January here, already up 65,000 for the month, for the year. And then I adjusted my goal. As you guys saw last time, I had this at 400,000. I've already hit it. I know it doesn't show here because I've taken money out. So I kind of adjusted the sheet to kind of reflect a little bit better. But I hit my original target, and I've taken out, I think, over 200,000 already. I just took out $50,000, as you can see here, this Friday. I like paying myself. Psychological effect of that is beyond imagination. It helps you get better and better every time. So you guys have a copy of the sheet. Obviously, yours is going to be blank. I sent you guys a blank copy. And basically, every day what I do here, again, I put in my daily profit actually earned. So Friday, I hit 51,326. This number I get the next morning from my TD account once they process the P&L. Then I put in my number of trades, number of winning trades, and number of losers. My number of trades, I only count the actual symbol. I don't count how many times I got in and out of it. I only count, hey, I traded Amazon, BKNG, CMG, TLRY, and etc. And I count that as one position. You can do it however you want. This is just the way I do it, just to keep things simple. Because overall, I either made money with Amazon or I lost money with Amazon that day. So that's how I do mine. Then I keep track of the market move, the range of the VIX, and I actually keep track of the VIX move as well for myself. So I can kind of look back at this data later on when we have enough data. And then on sheet 2 is where I copy and paste my trades from my TD P&L source. You should be able to do this from any broker. And then just organize this. Once you've downloaded this sheet, you should be able to adjust it the way you want it. So if you don't have all of these columns, you can adjust it. I was telling Fee, I'm not done with this sheet yet. I'm constantly modifying it. I'm going to make it separate all of this and tell me which symbols I do better with. You know, how many dollars do I average, for example, when I get in the trade? What's my average, profit? Like, do I go $50, $20, $30? What's my average return? 500%, 200%? I want to know all of that. I haven't finished the sheet yet, but I'm constantly adding to it because I want to know all of that stuff. You see? This is what's going to help you at the end of the day figure out why you're good or why you're not. And it's part of everything, part of the details. It's like, when I go over here and I say, hey, man, you were up 70,000, but you only ended up making 10,000. What happened? I want to know, did I overtrade? And then when I look at my video, what do you do, Ron? And I'll show you. Actually, I did put this video in for you guys so I can show you. It's really fast forward because it's a long day, but I wanted to show this because at the end of the day, let's go back to the slides. You guys got to remember that we're here to learn. So when Leo sends us an alert, you got to remember that Leo's trading too. And if Leo's trading and he told you what he just did, he probably told you with a slight delay. So you got to kind of pay attention to what just happened because he can't manage your account for you. You have to manage your account yourself. And let's see why it's not showing me the slideshow. So number one, you are here to learn. A self-sufficient trader is a winning trader. I always like to say to everybody, especially some of the guys that have been around, is you should know, especially when Leo sends out these weekly earnings plays and he tells you to look at the charts. If you took the courses, your goal is to learn so that even if Leo is not around, you know what you're doing. You know what move we're expecting. And a perfect example was when we were transitioning between rooms. And Leo was nowhere to be around, but we were all chatting and we're like, hey, we're expecting a move 7. We're expecting a move 7. And then, Leo comes in and the move 7 plays out and it was exactly what we were saying though, you see? And it's just that. You have to be ready and know that, hey, if Leo's not around, do I know how to trade? And that should be your goal. You shouldn't need somebody to tell you what to trade. At the end of the day, when Leo sends an alert, you should agree and be like, yes, that's a good play. I completely agree. I studied the chart. It looks good to me. I'm getting in. All right, so you need to have a process. What is your process? When Leo says buy, 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 do you immediately go and buy calls? Or do you look at the chart and pay attention to what's going on? Because sometimes you buy, but Leo already might have gotten in. You also got to keep in mind that Leo, Ron, everybody has a different account size. So the moves that you can withstand on your account are different when you get into a position. But if he says buy, 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 and you didn't look at the chart, you just got in, and then he turns around on you, you're like, oh my God, I'm in the red, and now you're scared. Now you're drawn down $3,000, $6,000, and as soon as it comes back, and I know this is familiar to everybody because I used to be like this before too. Oh man, I was down $3,000, $6,000, $10,000. Oh, I'm up 500. Oh, I'm up 1,000. Oh, let me get out. I see green. Let me get out. And now you're out. And then it starts going our way, and you say, oh, let me get back in. It looks good. You get back in, and now you're too late. And now it turns around, and you're at a loss again. And this is where execution comes in. You are paid to manage your position. You are paying yourself to manage. And if you're not managing properly because you're getting in too late or you're getting out too early, you're screwing yourself up. And you have to pay attention to that. You have to look at the bigger picture. So when Leo's telling us, hey guys, it's time to buy calls, and you're like, I don't know, the market looks like it's going down. We're on a bear market. I don't know if Leo's correct on this one. I don't know. Let me take a look at this. I don't know. It looks bad. And the market's going down. We're gapping down. I don't know, guys. I don't think I'm going to add at the bottom here. You're like, okay, you didn't add. But now you add when the market came back up and exceeded where you originally entered, or you get out, and then you decide to get back in when it's too late. That's where you're messing up. Again, you are being paid to manage your position. And this is why keeping track of your trades, recording your screen will help you significantly. Setting up the proper indicators for yourself. My indicators may not work for you. So you have to realize what indicators you just jive with you. You know, man, these indicators I can jive with them. I can understand them. When I see this, I get it. You know, I just get it. And for me, it was the RSI, Collins RSI, and the RSI in the 4 period. You know, I just picked those up, and the person's pivots. They just work for me. But I've seen so many videos, and I keep telling you guys, or different people I talk to, it's like, try to learn something new every day. Look at how other people trade. Try to learn. And, you know, try to learn something that will jive with you to the point where you are self-sufficient and you will understand. You definitely need to understand patterns so that you know when to get in because it's a good time to enter and when to get out because, man, this looks like it's about to reverse. And maybe I'll get back in when it gets slow. And I'll show an example of that as well. All right, so you need to eliminate and manage risk. So, again, that's why, you know, hey, you know what? And I'll show a perfect example of this from this Friday. It's like, you know what? Let me adjust my position here, free up some cash so I can get back in on a larger position with less money. But yet I'm still green. My profits are locked in for the week no matter what. All right, so lock in your gains. Was supposed to come out in the beginning. And I hope everybody can see this clearly. I'll talk through the video as it's playing. All right, so here I have the money meter. Let me pause this real quick. I started the day at 127,000. This is from the day prior. I'm up. I'm at around 127. Let me double check my sheet again. We knew it was a move 7, and I fought the move. I literally fought it. I actually was down, and I made all that money back up at the end because I went in. I was like, you know what? Let me just go the right way, and I fixed myself, and that's fine. I'm fine with that. That's what I'm paid for. I'm paid to manage, and I'm going to do that. So here we go. I started at 127, and what I'm going to show you guys here is what happened this day. So let's see. Oh, this is the day that I was up 70, and I only ended up making $10,000, and I'll show you. So fast forward. It goes pretty quick. I fast forward to pretty much everything. So I'm just going to talk through some of the things that happen here, and where our management comes in, where we have to kind of kick in and say, hey, manage this. So here we are. This is the peak. It was at 3 o'clock. I'm peaking at around 189, 190. My account is up like 66 to $70,000. At this point, I'm actually worried because I'm looking at Amazon, and Amazon's my biggest position. RSI is peaking. The markets are actually peaking. If you guys go to that time, 1500, you'll see that Amazon and SPX, NASDAQ, futures were all peaking high, while at the same time, the VIX was peaking low. So I got 4 reds and a green, which is what I like, the indicators I like to use, and it started to turn around. So you can see my limit orders are pretty close. This is at the time that we were talking about where our limit orders were set. I mean, my limit order was literally $3 away. I didn't think it was going to turn around that fast, but this is why we have to manage. You know, I didn't think it wasn't going to make my $3, but it didn't make it. And I started adjusting my orders here, and I started taking profits as much as I could. I was like, you know what, let me start lowering my profits. BKNG completely got away from me. It just, when BKNG is going against us, it's just hard to lock in those gains. And I think I took a loss from BKNG here from 13,000, 14,000 that we were up. I think I took a loss because I couldn't get the fills at what I wanted it to be. I still ended up in the green because Amazon was just so massively up. I was so deep in the money. I still ended up locking gains. And as you can see, most of my positions, as you see me here executing on this side, most of my positions are in the money, deep in the money. You'll see it. I don't know if you'll catch it because it's moving so fast. But every time I get into the positions, I think you'll see it on the next video, I tend to buy in the money first. 1, 2, even if it's small positions, first, and then I go deep out of the money if I feel like the move is going to be strong. But I try to make sure that I'm in the money first, because those are going to retain value and gain value a lot more faster once the move starts developing in our direction. So as you can see here, the money meter on the top left, look at that number just go down. Once again, it kind of reminds you that November 15th day. I was like, you know what, let me start locking gains, and I start closing out. So you see my option buying power should start going up in a little bit here as I start closing out some of these bigger positions. And the reason I took so long to close some of these is because I wanted to wait until the 30-minute candle. I do manage at the 10 and the 30, but I did want to make sure that this wasn't a fake bounce down. But once it was confirmed, I got out. But again, you guys notice that you only get buy. You don't get sell. Leo's not here to manage your account. So if you see something like this and you're not comfortable, lock in your gains. You can get back in if you have to, if you must. But lock in your gains. That's the key. See that? It went from 190. I was trying to get to 200. I got to be honest with you. I was so close because my goal was to finish the BKNG and Amazon at 200,000 each profit. And BKNG hit it. Amazon hit like 195. So I was playing a little bit too much with the money here, and I didn't take those profits. So that was my fault there. But here we go. I think at this point I was pretty much done, and I finished at 133, and that was the day for December 28th. Okay. Let me see what happened here. Oh, I took money out. So I took 25,000 out. That's why I'm at 109. So I was like, you know what? It's payday. Friday, payday. Pay yourself. I don't care. Pay yourself. It's psychologically speaking, it does wonders for you. And I just said, you know what? Let me pay myself my $25,000 because that's what I want for this. All right. So this is the this week, 2 January through the 4th. And basically, what I'm gonna do through 2 through the 3rd, I'm just showing you the beginning and the end of the day. So you guys can see where I started. So I see net liquidating trades. So we already have positions open, basically, based on what we said, where we were going. So I had some calls in already. So this is the account starting from those trades that we entered prior. So, and then I'll show you where we start and where we. All right. So the account opens, market opens, account goes down immediately. At the end of the day, 15.59. We're back to 128, 130. Okay. So that's January 2nd. All right. January the 3rd, we open again 127. I think it drops down. All right, boom. It drops again. I think the market started lower again. All right, at the end of the day, we kept adding. I just bought more calls. This is when I said I'd try to add another 50 because I was like, man, this is going to be good tomorrow. I tried to add another 50 at 1,600. I paid 30 cents for those. 30 cents I paid for those. Okay, January 4th. Boom. Market opens. 84, 115. And we're going up. And then throughout the day, this is fast forwarding. I got the rest of the day here pretty much. I started adding before I started closing anything. But one thing that bothers me here is how much option buying power I have. That means I'm using a lot of money. And I'm like, you know what? I personally am not comfortable right now. Everything, I still believe we're going higher, but I want to put myself in a position where I can add or manage myself a little bit better. So I added to a few of the positions like TRY and CMG that I had open already, and before I closed anything, and then I started closing some of the positions that I was like, you know what, I got a lot of money playing here. Some of these I closed a little bit early. I should have waited a little bit longer. But I was like, you know what, I'm going to get back in anyway, so let me just take my profits. When it came to Amazon, I took my profits at the pivot. I was like, you know what, this is a good time. We're at a pivot. It's either going to keep going higher or it's going to bounce back and then keep going higher. So I took my profits at around that level on Amazon for the most part. And then BKNG. Okay, so here I slowed it down because what am I doing here? I'm taking my profits on BKNG here. It started to pull back. Do I have it here? Yep, right here. It started to pull back. I was like, you know what? Let me just take my profits. We're near pivots. I'm big on these pivots because it's either going to pull higher or it's going to turn around. So I was like, you know what? Let me take some profit. I'm over $10,000 here, and then I'll just get back in. And I did just that. But I was like, you know what? Let me take my profits. Let me start bringing my account buying power higher. And then you'll see in a little bit how I lock it in above where I started for the day. So I was like at 123, and I still had a ton of positions open where I'm still making money. You'll see that in a little bit here. But you see, Lukanji started pulling back. Everything just paused there for a little bit. So I was like, you know what? Let me take some money, and then I'll adjust because I want to be in control. My goal is, hey, you know what? I want to make money today. I got to pay myself, so I got to stay in control, and I got to put myself in a situation where I feel in control. Because if I have over $70,000 playing and this thing turns around, and as you guys know, when it turns around quick. And anything that was worth $15, $20, $30, or if you have something that's out of the money, it's worth $2.50, it'll be worth 50 cents in a second. And that's just what it is. So I start basically getting my money back above 120 is where I want it. So I'm not closing anything in the red just yet. I'm waiting for Amazon to come in the green and just about everything. I knew TLRY, I tried to adjust for it so that it would come my way. But eventually I just get rid of it because, you know what, it's just bothering me looking at it. I want to manage the positions that are winning for me. So I got rid of TLRY eventually and CMG. CMG actually worked. I would have held it. But it was one of those situations where it's like, you know what, it's taking too long, and I don't want to be distracted by it when I have so much money playing on the other positions. So as you can see, my option buying power keeps going higher and then lower because I keep adding positions. And so I keep getting back in. So I got back into BKNG, and I believe I added again to Amazon. At the money. I started adding at the money for them. So at least 10 contracts. So now that's basically what I did. On Amazon, I took profits from 10 and I kept 3. Again, both of these are in the money. And I just kept them. I kept 3 because 3 contracts on Amazon. When this thing starts moving, it's still going to be a nice profit. Then I get out of those 3 and then I get back in with 10 later when it starts to pause again. I just slowed it down here. So basically what I'm trying to do here, boom, there you go. So now I'm up. I'm green for the week. I'm green for the day no matter what. So now I can add. I can do anything. Now I know for a fact that I'm going to make money this week and for the day. So I'm like, okay, so now let's manage this from now on. So that was my goal. So now that I'm in this position, I'm in control. I'm happy. Now, my state of mind, everything, I'm like, hey, man, where are we going from here? Let's see. So we fast forward. All right, so then this is the point where everything just starts to consolidate, but we're still grinding higher. So basically, we're just watching that. See, okay, my option buying power continues to go higher. I keep adding, keep closing positions, and I just keep managing. At the end of the day, this is what you're paid for. So once buy, I could actually did more if I would have held it. But I started cutting positions because it was too many to manage. I only wanted to look at 2 at most, and my 2 favorites are always BKNG and Amazon because they make me the most money. So I wanted to cut back on a lot of these. And the ones, you see me on other positions, usually they're a lot smaller than what I have Amazon and BKNG. All right, so it's 1,300. Basically, at this point, I think I take my last of Amazon because I don't like this pattern here. We got an evening start. Things are just consolidating. I just wasn't liking it. And I was also looking at the RSI and everything on the markets. The SPX at this time was actually 2 candles from an evening start already going down. Amazon was still trying to push higher, and it does go higher from here a little bit, but then it pulls back really hard. And things just start losing value really quickly. And I was basically done at this point. I think I pulled out my money. You'll see my account value go down here to like 114. And I think I finished at 115. And I put in one last trade on Amazon before the end of the day. And I was expecting that pullback, just like Leo said, 1565. I was like, the RSI has been above this top line here all day. I'm expecting a pullback at some point. And it did just that. I didn't pull back all the way to 1565, but I did take a small trade, made an extra $1,000 so I could finish the account at 115 after I took out my 50. And then I was in. I was happy, I think I'll fast forward all the way to the end of the day here. All right, so there you go. I closed out Amazon. Account is at 164. It's 1 o'clock. 2 o'clock, I'm back down to 114. That's because I withdrew the money. And then I finished at 115,000. So now fast forward to 4. And that was pretty much it. That was my day 4. All right. So I definitely wanted to cover this. I wanted to cover it last time, but I definitely want to cover it today. This is one of the reasons I wanted to do this today. So mental state, and I want to say clear heads definitely do prevail. So in the beginning of the day, for me, what is your mental state before you start trading? What is your routine? Are you stressed? Are you tired? Angry? Confused? Anxious? Are you in a positive state of mind? How do you see yourself for the rest of the day, especially when you're about to start trading? It's very important, at least it is for me, to make sure that I'm clear. I'm in control. It'll help me stay in control, but if you're in a situation where you just don't feel like you're right, you shouldn't be trading. You're dealing with a lot of money, real money. And, you need to make sure that you're in a situation that you're going to be able to manage that and manage that correctly. Because you don't want to put yourself in a situation where you're making mistakes. But these mistakes will cost you money, real money. And you have to pay attention to that. So to me, this is very important that, you guys have a plan for this. So for me, is, what is your daily process and routine to manage your mental state? I get up, I exercise. I get up, I do some reading. I like, this is your profession. It's like Leo had mentioned before. When you study, one of his videos, he was saying, when you're in the sport, you train. You train. In our sport, you got to train your mind. So you got to stay positive for, learn something, read books. If you're into trading, you have to get better every day. Like I said, a self-sufficient trader is a winning trader. So you want to be constantly in a position where you know what you're doing. If somebody tells you to buy stock, buy options, sell options, or do anything, you need to know why you're doing it. You need to agree. You have to say, yeah, this is a good play. Because the thing is, it's hard for us to keep an eye on thousands of stocks. But it's like, hey, if you see an opportunity, you don't want to miss it. Hey, I went in on it. I didn't get a chance to take a look at that and find it myself. But don't come to the group expecting that somebody else is going to tell you when to get in and when to get out. You're going to get rich and make money every day. That's not the answer. Because at the end of the day, this is your pain. And it's you that's going to feel the pain or the pleasure. You're the one pressing buttons. You're the one that's making the decisions at the end of the day. You're the chief in command of your computer and your accounts. So when you press that button, it was your decision to get in. It was your decision to get out. So keep an eye on what you're doing and why you're doing it. All right? Another thing I like to do is I watch videos. Every day I get up and I watch at least one video on self-improvement. Like those Goldcast videos or Gary Vee or any of those videos that just kind of pump you up in the morning. Just so I do my exercise and then I watch at least one of these videos. 15, 10, 20, 30 minutes. However much time I have, I put a video just so that I get myself in a situation where, like, yeah, you know what? I'm ready. And if I still don't feel ready, then don't trade. It's just, but that's just what I do. Again, and then last point here is stay self-aware and manage yourself first. You can't manage positions, you can't manage money when you are not managing yourself first. And this has helped me a lot. It's little turning points here and there. There is no holy grail in this. I know you guys taking the course and you're looking for an answer. You're looking for something that's just bent. I get it. For me, it wasn't so much in the courses, but it's everything that came after when I saw, getting more patience. When Leo says, stick to the trade, hold on, wait a little bit longer, you'll see. Because I wasn't that patient before. I did know how to make money. I could make money before my own, but I never made big money. I never made money the way I'm making it now because I wasn't patient enough. I would be drawn down 3, 6, maybe 10,000, and as soon as I saw 500 or $1,000, oops, let me take that money and run. But that's the wrong answer. Why would you allow yourself to be drawn down $10,000, $3,000, or whatever your account is, but not give yourself the chance to make more money because you're scared or you're like, oh my God, thank God I'm back in the green. Let me get out. So that's the thing. That you guys have to, if you don't know how to do that, you kind of have to, manage yourself, and just control and know why you got into it so that you can trust it. and you can see the bigger picture. But sometimes it is, you know, you just get out, you're like, oh, I'm back in the green, let me just get out because I don't think it's going to keep going higher. But it's because you lack the vision of the bigger picture to see, hey, this actually is going to go our way, and let me stick to it longer. But if you need to manage, like I showed in the videos, hey, you know what, let me just cut it and then just get back in. You can do that, but just know that you need to stick to the position a little bit longer, because at the end of the day, that's what's going to help you get better results. All right, and then use good chart reading and analysis to have confidence in your positions and be prepared to accept the outcome either way.
Awesome. Thanks for sharing. I wanted to ask you a question because I'm sure it's on everyone's mind. How do you handle, because a lot of guys, honestly, they see your account going from, 127 to 78. A lot of guys, if that's going on with their account, I mean, they're almost having a heart attack. So they're looking at you right now, and they're understanding what you're saying, but it's similar things are happening to their account. Guys are just getting scared. They're getting scared. So how do you deal with these swings? And I hope I'm right that this is probably a question on everyone's mind. So how would you answer that?
Well, that's part of the patience part. I got real patient. And I'm going to be honest, I'm going to tell my story once again. When I started with Leo back in September 10th, day one, first alert, or one of the first few alerts was BKG. We got in on Monday, and the very next day, that same position was up $6,000 to $7,000. I was like, man, that's quick. Like, I never, I've made $6,000 to $7,000 on my own, but it was never from one day to another. And I was like, man, this is some powerful stuff. This is good. I was like, hey, man, I want to, and I was messaging Leo. I think he mentioned it the last time. I was like, hey, man, I want to know what he knows. So I kept like, hey, Leo, let me know what you read, what you subscribe to, what books, what got you to this point, because I want to know what you know. I want to understand everything. That same week, we got my account basically to like 40,000, maybe just a little bit over. And again, we didn't lock in gains because Leo tells you to buy. He tells you, hey, this is what I'm doing. But he didn't tell me to get out. Fuck, man, I finished my day under 25. I finished the day under PDT because I didn't lock in gains. I just didn't think it would drop that hard. And, we were playing the long game. If you watch any of Leo's videos, any of his training, his stuff is 2 to 3 days is where you're going to get the most bang for your buck. So, in expectation, like a lot of people that join, when you first join, you're expecting, hey, you're telling me to get in. I'm assuming that you're going to tell me when to get out as well. And that's the wrong answer. And, I tried it. That's why, I want to have this webinar again. I said it the last time, you're here to manage your account. When you get in the trade, and it took me 3 to 4 weeks to kind of realize, like, wow, what are you doing? Because, I was talking to my wife, and I'm like, you know what? I was making money. I wasn't making big money, but I was making money on my own. So I was like, man, obviously something's going on here. But the big difference was that, even though I wasn't making money, my account was getting massive boost higher. So it wasn't the fact that, the opportunities weren't there. The opportunities were there and beyond what I was normally doing. Because as you saw on my sheet, I normally grab 1%. So I would be 1 to 5% every day I would make. I can lock that in every day. That's not a problem. Easy money. But, when you're doing Leo's strategy, Leo's system, it's a longer term, which, I didn't have the patience for that before. So that's something I picked up. So now, once I started to see that, my patience for the tolerance as well, for the pullback, to answer the question, sorry, I'm getting away from it. For the pullback, once I figured, I'm like, okay, well, he's not telling me when to get out. I need to apply my system, which for me was the pivots, and, when my signals tell me to get out. So for adjusting for the drawdown, now I'm like, well, this is part of the game. I'm comfortable with the money that I am using. So I'm giving myself my personal stops. Where it's like, well, if this keeps going down, then I'm going to get out when, my money meter's here. But I'm trusting the vision that I'm like, well, I did the analysis too. And the big picture says that we are going higher, for example, on this week. So as you saw on the video, I was down. I started the days down from the previous day. But as you saw on Thursday, I added more positions. I tried to add 50. I really wanted 100, but I was like, you know what? I'm willing to risk the amount of money I'm putting to buy 50 I wasn't 100% sure I wanted to risk the money I was going to put in to buy 100 at 1,600 because it's so far out of the money. And even though it was 30 cents, those things were worth like $6, $7 at the peak or something like that, or even more. You know, so 50 of those, a lot of money for us, you know, that you bought at 30 cents, you know, it was nothing. So for me, that's really what did it for me. It's just, you know, having a vision of the bigger picture and looking at, when you start looking at the bigger picture, like the daily, the weekly, and the monthly charts, it did it for me. So for example, I kept saying, I'm like, man, I did, before the end of the year, I think we were talking about it in the group. I'm like, I don't know, man. I'm almost 100% sure. I would say that January is going to be a green candle for the month. Because I'm looking at the RSI and everything. I'm like, I don't know. We've been going down literally 2 weeks straight. And if January is not a repeat of November, which everybody remembers, we were playing November hard to the put side. And I showed you guys my video the last time where I'm up over 100,000 for the day. And I just let it go. There was no need for me to let that go to the red. But, you know, I was being too cocky. I was being a little too greedy. I learned my lesson from that time. So, you know, I manage a little bit tighter now. But, I see, you know, my account keeps bouncing up and down, but that's why I pay myself. You know what the market can't take from me? It can't take away what I paid myself. So that's my take on it, on that. And as your confidence builds, you will trade differently. I got to tell you, I have been testing the same thing you've done, Leo, in your videos, where you're taking small accounts and growing them. I took my E-Trade account from 1,500 to over 14 or 15,000, and I did the same with one of my son's accounts. I blew up one of the other accounts of my son's accounts. I put $2,000 on each one of my son's accounts. One of them I blew it up. The other one I tripled or quadrupled it. It's like at 6,000 to 8,000 now. So I'm testing because I trade differently now, obviously, because of my patience and what I'm doing. It's just my state of mind when I'm putting in these trades now. I have more patience and my execution is more on point. So that's why when I started 78,000 and we saw that the next day, boom, it's at 115, 120. It's just the patience for me.
I love that answer. I like the best highlight, I think, to kind of summarize. I like what you said because I think about it all the time, is I try to focus on what's coming next, because I think most of the traders, they get scared because they're looking at what's happening right now. Oh my God, I'm down 12 grand. They focus too much on that. But you nailed it perfectly. And, you know, we didn't role play this, right, before we got on this here. So this is awesome because, you know, you're looking at the same time, at the same thing. If you're focused on what's coming next, where the market's going tomorrow, where's the market going the day after that, right, then you're really trying to get the right answer to the trade and the question. But I think most of the people, they cannot hold on to these trades is because they're too much focused on what's happening in the next 5 minutes, what's happening in the next 15 minutes, right? You know, if they're losing 8 grand and all of a sudden next 15 minutes now they're losing 10.5, they're like, oh, that's it, I'm out, I can't handle this no more. And then that was actually the worst moment, and after that things turn around and boom, but they're already out of the position, right? And look, before I want others to ask questions too, but I want you guys to think when you get in the alert and says buy, 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 okay? Let me break this down so just everybody's on the same page, because we never really get to talk a lot about that, okay? And when you see buy, 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 just make sure, if you watch the video that basically tells you, I recorded a special video on basically how you get into the trades. Buy, buy, buy means start buying 1/3 of what you allocate to the position. So in other words, if you're trying to put $10,000 into the trade, don't go and buy $10,000 of Amazon calls or puts all at once. Just buy 1/3. So put $3,300 in the trade. That's going to be your buy number one. What's going to happen is now Amazon could start dropping and you own the calls. Well, guess what? If it drops, okay, you can use the second part of the $10,000. You can use the $3,300 to add, or you can decide to cut the position if if all of a sudden you see stuff on the chart that's telling you, hey, I don't want to be in this trade. You can get out, but because you didn't initially take a huge stake in that position, okay, your losses are not going to be big. So when you see buy means, look, don't buy all at once. Buy 1/3, add 1/3 if you have to, right? And add later when the position starts making you money. Okay, so the main point here is it tells you that, look, we're looking for these things to go higher. So buy calls, or we're looking for the things to go lower, buy puts, but it doesn't guarantee that all of a sudden in the next 15 minutes it's going to go in the exact direction where we're planning it to go. Because charts, sometimes they don't point specifically down to a minute when things are going to happen. And sometimes they are, but you got to be prepared when the trade is going against you. And the only way to get prepared for it is to leave some money aside to add to the position. Okay, hey guys, if you want to ask Ron a question, just do.
Hey Ron, this is Shaq. What is the stick that you trade? What is that thing?
Oh, the tick.
Tick, yeah.
The dollar tick. So dollar sign tick. That's the New York Stock Exchange. That's the overall ticker for the market and where the market is heading. So the way I use that is it gives me a sense of the overall sentiment of the market. So if it's trending above zero, this is on my other screen. So this is also a screen I look at every day. So this is when I was talking about that the market was, and this is actually from that day, so the 28th. Here we go. We had red. This is the 28th as well here. This thing wasn't all the way on the red, but it was there. And then here, red. See that?
Yeah.
And then the VIX was green. So that tells me, hey man, this is a good time to get up. I completely missed this screen, so that's why I didn't take all my profits there. I did see it, but I didn't, it just caught me by surprise, and I just didn't take my profits at the peak. Because I did think we were going to get at least $3 more on Amazon. But to answer your question, the tick here, if you take a look at it, when it opens high here, it's opening, there's 2,800 tickers on the New York Stock Exchange. So it basically tells you what all of those are doing at any given time. So anything above zero, that means that, out of 2,800, let's say it's at 1,500, take away 1,500 from 2,800, or what? Basically, more of them are ticking higher than they are ticking low. And that's basically what this is telling you. When it's ticking below zero, more of them are ticking lower than they are ticking higher. The way I look at this is, where is it trending? Is it trending above the zero line? Is it trending above 500? Are we getting more peaks over 500 than we are below minus 500? And as you can see here on the 28, what day was this? This is the 4th. See, everything is just above zero. And when you get closes above 500, but you're not getting any closes below minus 500, they kind of tell me, hey, we're going high. So that's how I use that. It's just another reference point. So like when you see this go like viciously lower or higher, it kind of tells you, hey man, you may be getting a reversal coming in soon, and you'll see it. The more you look at this, the more you kind of get used to it, and you'll see what I mean.
All right.
And then with the markets, I have this screen up as well on my primary laptop screen here. Is just see this RSI, man. When I see these 4 peaks or bottoms, and then the VIX is doing the exact opposite. It's a really good time to either get in on the direction, on the opposite direction, and you can see it's clearly on the very next candle. So, see this? Boom. You got this lacking momentum here. You see the candles keep getting smaller. Like, it's a good time here. And then that's how I use that.
I've got one more question, Ron.
Yeah.
Do you? In the past, in the 6-8 months, market was topping up, and we know they're making double and triple tops, and there was nothing below those tops or levels. But now we're in a zone where there are a lot of resistance and support areas. And so, is there a way, or how do we know that these resistance and supports could be broken? Because this Friday, I was thinking of getting a Netflix call trade, but I saw some resistance levels, and I just kind of got scared and didn't take them. So, is there a way to know that these levels could be broken or would be broken?
I always tell everybody, you ultimately don't know. Nobody really knows what's going to happen at the end of the day. But you can go basically looking at what you're looking at the bigger picture, what the daily candles are doing, and things like that. But as far as the resistance levels, that's why I use these pivots. See these pivots here?
Right.
These things work great for me, man. So it's like, okay, if I get a close here above the 10-minute, boom, I take it long. I'm like, you know what? And as long as it keeps closing above that line, I stay in my position. If it closes below, my stop is not that far below it, you know? It's like, all right, well, it's not going to move that much if it goes against me. But if it closes below, then I get out. So it's the same thing. The next pivot is this one. See? It just paused right on there. It didn't break out until 15:20.
So how do you get them? How do you put them on your screen?
This is Person's Pivots. It's free with Thinkorswim. On other platforms, you have to pay. This is a licensed study on Thinkorswim. Okay. So you can get those. That's what I use for these resistance levels. So that's why you see me taking profits a lot at these levels. Because Leo sometimes tells you, hey, the target is such and such, and let's say the target for this would have been 255. But let's say it would have just stood here or bounced off of here, which it does a lot of the time. That's why I take my profits here, because the target may be hit, but it may not be hit today. Maybe it hit tomorrow or 2 days later or next week, which we've seen happen a lot. So that's part of my managing process is, you know what? Let me take my profits where I'm comfortable, where I know, hey, you know what? I know at the very least it's probably going to get near or to these pivots, so I'm going to take my profits in and around these areas.
Gotcha. Okay, thank you.
Ron, could you actually click the area to show, because I'm not sure if everybody's familiar with the studies in Thinkorswim and where to click to actually put this on. So can you like specifically point out where would Shaq need to go in order to put this on? Like the actual...
We can call TD, they can walk
I can show you. There you go. So when you go to your studies, you go to Add Study. It's under License Studies.
Gotcha.
So it's called Person's Pivots. Person's Pivots. This one right here.
The FS?
No, Person's Pivots. Yeah, under FS, and then you see here, Person's Pivots.
Right.
That's the one I use.
And Shaq, to follow up on your question, right? How do you know when a level of support or resistance could be broken? One of the first things that could indicate whether it will be broken or not is the volume. So look at the volume. So if for example, the price action is getting close to an area of resistance, if you see it's getting closer to the area of resistance on lower volume, in other words, you'll see a divergency on the volume, just as described in the chart divergences course. If you see the divergency, in other words, the price action goes higher, but the volume is going lower, then you know that the area of resistance is probably not going to be taken out. There's probably like a 90% probability that it will not be taken out. You need to see volume accelerate on the way higher for the resistance to be broken. Does that make sense?
Yes, it does.
Okay, so that's the number one thing you need to look at if that's what you're trying to decide. Then clearly you need to look at that. If you just put in the trade for that day, you need to look at the 1 day, 1 minute chart, 2 day, 2 minute chart, and use that. Also look at the 5 day, 15 minute chart. By looking at those 3 charts, you'll have a good idea whether the volume indeed is accelerated in relation to the previous days. For example, the stock might have been at the resistance level the day before. So if you look at the 5 day chart, you're going to be able to compare the volume in relation to the volume where the stock was trying to break above that resistance level the day before. And that's how you can calculate that. Clearly, all the other patterns that you could observe intraday, they should help you as well. Like for example, in the last 2 days, there was a reverse head and shoulders that I was trying to point out. And so if you would have observed that with combination of accelerating volume, that you would know that a lot of stocks had a good chance to break out. So in other words, don't just look at the volume, but it is definitely one of the first things you want to look at is the volume. Is there divergency on the volume, or is there confirmation of the breakout on the volume? And then that should be helpful as you're trying to make that decision. Okay?
Gotcha.
Okay, cool. And if you haven't watched the last video I posted, basically the most crucial point, we've drawn a comparison between what the market is doing now and last year on the after February 9th is the fact that even though the market is going higher, it is not often going higher in the morning. Initially, it's dropping, so you want to buy that dip and then wait for it to bounce higher for the rest of the day. And that's been the predominant trend in the market. So just focus on that. Now, that trend has been broken on Friday. Sean, you should be buying tomorrow, right? But you want to be aware, like, here's the deal, guys. As the China meeting progresses, okay, a lot of these news, because China is on a different time zone, what you will have is a situation where some very important news could break out after hours because it's a 2-day meeting. Like, it's the same thing with Federal Reserve, right? They start a meeting on Tuesday, but we don't get typically any announcements that are made publicly till 2:30 p.m. on a Wednesday. So the meeting probably, it might have already started over there, but we're not sure if we'll get the news during the market hours or after market. So you don't want to be caught off guard having a huge position, but you don't want to miss out if the news is good. So keep a decent position. Don't put your whole account thinking, okay, well, for sure the news is going to be good. If the news is good, you definitely want to add to the position because I think that momentum, I think more institutional investors that have been unloading their positions, they're getting back in the market right now. We've got many things that are positive. We've got oil prices have stabilized. We now have confirmation that they're not planning on raising interest rates. We have a lot of positive developments that are going on. And so if we get some good news out of China, the market will go higher. There's no doubt about it. Just don't expect it to go higher like each and every day. But as homework, what would be good is for you to go back, look up the charts from February 9th, 2018, and see exactly 2 weeks after what was happening, because there's a great probability that this is exactly what's going to be taking place. And consider that we're already 1 week into that environment. So there could be some down days, but I think on the down days, like, they will be buying. I think institutional investors will be buying this market. So just be ready, because you don't want to buy high. You want to wait for the dip. So just keep buying the dips. That's the strategy we're going to keep using unless there's some crazy bad news. Did that answer your question, Sean? Okay, cool. All right, guys. Look, I think it's going to be an incredible week. Whatever your goal is. Oh, Ron, I did have a question for you. The $1 million, was that your monthly goal for this month?
No, that's well, I mean, it's for the year at least. But I don't
Ron,
have a date for it.
Ron, come on. I thought that was your monthly goal.
Well, let's see. I mean, I didn't put a date to it. It's just initially it was just, hey man, at least for the next 12 months. But I'm like, at the rate that I'm going, I should hit it way before the end of the year. So.
Okay. All right, cool. Well, I would love for you to do that. I know you will, and you'll probably do it sooner than you think. So everybody that's here, I want to see you have great results. Set some goals, because, you know, the importance is Ron has actually typed that $1 million number in there, and that's how I know he's going to hit it.
And you see it on my board next to me. I look at it every day. It's on my blackboard. I don't know if you're looking at me on the right. I'm logged in on 2 different ones, so if you can see it here, I got the camera on here.
Exactly. So you guys, that makes a big difference. And I think Ron also showed you something incredibly crucial. He pays himself. He takes the money out of his account. So the numbers you're actually, like when he was showing the video, Ron, how much so you took out 25 and then 50, right? So you've taken out 75 grand.
In the last 2 weeks. So last Friday I took 25, and this Friday I took 50.
I mean, that's 2 weeks.
Last year, I think I've taken out over 200 by now.
Okay.
This is since October. So, listen, I've paid years and years worth of debt in the last 3 months. So, I can't complain.
Yeah. Okay. Ron, great job. Thanks for your willingness to share everything with everybody. Guys, I appreciate everyone meeting on a Sunday night. Let's have a great week. Let's roll. Let's make it happen. Set your goals. Just don't be scared. Don't let the market scare you out of your profits. Stick to your positions. Be strong. I'll talk to each and one of you throughout the week. Okay? Thank you, guys. Thank you, Ron. And have a good night. Okay? Take care.
All right.